Hey guys, welcome back to RWM Finance. Today I'm going to be discussing some differences between growth investors and value investors. Growth and value investors are very different. Each have different types of investment strategies. They have different investment goals, which means that they invest in different stocks, bonds, ETFs, you name it. Once you understand the differences between the two, it will allow you to determine if you want to be a growth type of investor or a value type of investor. Not everybody is meant to be a growth type of investor, just as not everybody is meant to be a value investor. Usually people would like to have a mix of investments, which would cause them to be somewhat of a hybrid type investor. Well, if you haven't subscribed, please scroll down and click that subscribe button for me, and we'll get to the differences between growth investors and value investors. We'll start with growth investors first. So growth investors invest in stocks with a strong growth rate. A strong growth rate is usually a yearly growth rate of 10% or greater. The companies themselves may not have been around longer than a decade or so. They also may have bad fundamentals such as a high P to E ratio, which is the price to earnings ratio, or a bad P to B ratio, which is price to book ratio. Oftentimes these companies do not pay dividends. This is because they invest all of their earnings back into the growth of the company itself. These companies are trading on the stock market above their actual net worth. However, they are believed to have the potential to grow and outperform the market over time. Now, let's move on to value investors. Okay, so value investors invest in companies with great fundamentals. But these companies usually have a weak growth rate, but they are not concerned with a strong growth rate. They also have low P to E ratios and low P to B ratios. Now, these companies usually do pay out dividends, and a high dividend yield is common among these types of stocks. But it is not a necessity. Many value stocks do not have high dividend yields, but they are consistent with their dividends. Value investors buy stocks that are currently trading below their net worth. Remember my video over how Warren Buffett invests? His favorite holding period for stocks is forever. This is what value investors do. They hold their investments for the long term. They expect the excellent fundamentals of the company to keep producing good returns for years on end, while growth investors are looking for companies with strong growth rates. But they are not expecting to hold on to those investments for the long term. They are looking for the short-term gains due to the strong growth rates, but they're not expecting them to last. I'm not trying to say that either type of investor is better than the other. That completely depends on the individual. Now, even though I'm not a financial advisor, if y'all were to ask me my opinion, I feel that a hybrid type of investor would be the best. Remember, that's an investor that invests in both growth and value stocks. But depending on things like age, risk tolerance, and investment goals and strategies would make me change how much of each stock I thought that an individual should have in their portfolio. Say you were a younger person in like your 20s. I would then say hold more growth stocks, because you have a lot more time to recover from the ups and downs of the market than say a 40 or 50-year-old person. For them, I would suggest a heavier dosage of value stocks. But hey, remember, the only person that can make you do anything with your money is you. So if you don't want to do anything, or if you want to just invest on your own and try and figure things out on your own, then more power to you. I'm not a financial advisor or a financial pro. I'm just a guy trying to help some people out by presenting different types of information that hopefully help somebody out. Whether or not you listen to it is on you, but I truly do hope it helps you out. Well guys, I hope you enjoyed this video. If you did, scroll down, give it a like, and subscribe to the channel below. If you have any questions, please leave those down in the comment section. I will personally try and respond to each and every one of them. Follow us on Instagram at RWM Finance. Remember that I post videos every Monday, Wednesday, and Friday, so make sure to tune in for the next one. Also, make sure to check out the list of books in the description bar down below. Thank y'all for watching, and I will see y'all in the next video.